right? Talking Baidu now, because we mentioned earlier that China is different, right? It's a walled garden, as they say out there. And that's because the control freaks who run the Chinese state don't want companies that are non-Chinese, because they don't want you, for example, to search on Tiananmen Square and get all carried away by revolutionary content.
Yeah.
So that's it, buddy. No Facebook, no Google, none of those businesses. So what that creates, of course, is an opportunity for someone, in this case it was a guy called Robin Lee, or that's his kind of westernized name, to search and set up the search provider, basically a Google knockoff. But knockoff it has been, and it has done incredibly well. It's grown to a market capitalization of $82.9 billion, valuing Lee's stake in the business at about $10 billion. Nice business if you can get it. Price to earnings ratio 49.2, not a dividend payer. Let's look at the share chart. Okay, it's been a little bit bouncy, but how do you rate these guys and their team?
Listen, if you've got a monopoly in China, any monopoly, you know, I think you're pretty well positioned.
Dominant position.
Yeah.
In a country with 1.3 billion people.
Yeah, and I think, you know, in China, I mean, you've got Tencent, Alibaba, and Baidu are the big, and I think is it JD.com?
Which is kind of an online retailer, similar to Amazon. So there's some interconnectedness between them.
So any of those businesses are going to have, you know, free reign to grow in China. The only risk is, and it's even a risk to an extent with Tencent as well, is that there's some sort of, you know, regulatory change, because you know, in China it's always going to be a binary result. You're either going to grow phenomenally, you know, or you're going to collapse. So
what are you suggesting, that they could, for example, fall out with the Chinese government or have some sort of a standoff?
Yeah.
But that's not going to happen, right? Because Robin Lee, or Yan Hong Lee, as his kind of Chinese name is, I noticed is, you know, on the 12th, you know, Revolutionary Planning Committee subcommittee or something, which tells you that he is a good comrade and that he is part of the party machinery over there.
Yeah, I think you're right. It's not going to change anytime soon, certainly from what we can see. But you know, if history has taught us anything, is that regime change can take place, and takes place quite quickly. So you just need to remember that, you know, and keep that in mind if you make an investment in any Chinese company.
That is fair. And look, they have this Cayman Island listed structure similar to Tencent and Alibaba, which brings about the offshore holding structure, which then gets you to the New York listing. But what you do have to recognize is that there could be regulatory risk, perhaps not of total closure or diminution of the value of the business, but they may decide for one reason or another to change the way that the capital flows come up through the company and are paid to foreign dividend holders or something.
Yeah, and
those sort of risks.
Those sort of risks, I think, are very real in China. But from a pure business, you know, revenue growth, earnings growth perspective, I think we still are in the early stages in China.
One of the other things that I noticed about them is that, similar to Google, they've put a lot of work into Baidu Maps. Now, maps are important because you might think it's just a cute app to show you where the blue dot is so you know where to go. But remember, commercial entities want to be inside of the maps because people are starting to live in that online mode. So they want to see where the nearest coffee shop is, or where the nearest parcel delivery service point is, or the next showroom for something. They're using that application, and that is the way that those preferred advertisers get profiled in those things.
Absolutely. I mean, if you're driving, you know, between town A and town B, and you want to stop over for a cup of coffee, you're going to go to Maps and see which is the closest coffee shop.
Yep.
You know, it literally puts every small business on the map, and you know, businesses will pay for that. And you know, that sort of thing, I think, is just an indication, or just the start of an indication of the sort of a runway a lot of these digital providers have.
Yeah. Let's go back to that share chart. I just want to check that again. So what are we looking at there is the US ADR of Baidu, and you can see it's back at its all-time high, which is around $240, $250 a share. So that was last reached back in November 2014. I don't know why it's done worse since then, but anyway, it's picked its game up and it's back now at an all-time high. Mr. Lee himself was US educated. It's also interesting that, isn't it? So a lot of these very smart, tech-savvy guys are Chinese. They come from a good family back home. They go and spend their undergraduate years and an early work career, and then they go back, and they know what to do. They're up and running. Yeah,
and they've also, you know, in the time in the US, they would have developed a reasonable network of people that they communicate with all the time, that, you know, enables them to be able to come up with these ideas.
Okay, good. So what do you say? Hot or not?
I'm going to go hot on it. Notwithstanding the risks, I think the internet in China is a 20, 30-year story still. Very
Big
much.
urbanization trend, lots of smartphone penetration, more still to come.
Yeah,
fantastic market to be in.
And I still think that there's plenty of runway there.
Yeah, I agree. Good. So hot on that.